Well, good morning, everyone, and welcome to Bloomberg UK, a news show with a special focus on the biggest challenges facing the British government, the economy and financial services, and of course the markets. I'm Francine Lacqua here in London. On the show this week, setting out priorities for the year, Prime Minister Rishi Sunak pledges to reduce national debt and cut inflation against the backdrop of dire poll ratings for his Conservative Party. Up next, the leader of the opposition, Kier Starmer, is set to give his rival speech over the coming hour with an eye to the next election. The Labour leader will say the party won't be turning to its big government checkbook. Plus, we're joined by the chief executive of the British Retail Consortium as companies and consumers feel the economic squeeze. Now let's hear from the Prime Minister Rishi Sunak on those top priorities and what was his first big speech of the year.
5 promises. We will halve inflation, grow the economy, reduce debt, cut waiting lists and stop the boats. Those are the people's priorities. They are your government's priorities, and we will either have achieved them or not. No tricks, no ambiguity.
Well, joining us now is Bloomberg's UK correspondent, Lizzie Burden. So, Lizzie, when you look at what Rishi Sunak tried to do, I mean, he did 5 very clear priorities. Will he be able to deliver on them?
Well, I mean, if you heard him say there, no tricks, no ambiguity, it sounds great, but if you inspect these 5 pledges further, actually, they don't seem new. They're pretty vague, and a lot of them were already going to happen. The Office for Budget Responsibility has said already that inflation was going to fall, the economy was going to grow. Controlling inflation is really the Bank of England's job, and if energy prices rocket, then Sunak can just say it's just out of my control. In terms of the time frame for National Health Service waiting lists falling, cutting the national debt, we don't exactly know when they're meant to be achieved by. And in terms of the law on small boats carrying illegal immigrants, this is as little a smaller promise as a politician can make. It's literally what lawmakers do. So Labour's response has been, is this it? Yeah. And I expect that Sunak's comms team are going to be tearing their hair out, because the front page of The Telegraph, the right-wing newspaper, is about Kier Starmer, the opposition leader, this morning, because Sunak wasted his headlines yesterday on more maths in schools.
Yeah, and it's very clear that Kier Starmer wants to be more business-friendly. So what are you expecting from him today?
Yeah, well, he really needs to claw back the initiative, because his speech was already in the calendar for today, but Sunak went first yesterday. He's already been optimistic. He's already set out a 5-point plan, which is very Tony Blair pre-97 general election. And he's already focused on the 2 big issues for UK voters, the economy and the National Health Service. So as you say, we're expecting him to focus on putting the private sector at the heart of the vision for the next 10 years. It's a continuation of the prawn cocktail offensive, and he's trying to put distance between himself and the former Labour leader Jeremy Corbyn by saying the chequebook isn't bottomless.
And we're getting, of course, some of the data out of the UK. So December services PMI coming in below 50. Now, the preliminary reading was 50. Anything below 50, of course, indicates contraction, so it won't be taken as, in any case, good news from the Bank of England or other officials. That December services PMI coming in at 49.9. So that's the very latest. And of course, this week we have huge strikes, and those don't seem to be going away at all. The Tories also 20 points behind in the polls.
Yeah, and you mentioned about the strikes. I mean, if Starmer doesn't address this elephant in the room, you're going to have a lot of disappointed people. He needs to either talk about the tougher legislation that Sunak's proposing on the strikers, or to promise some inflation-busting pay rises. Otherwise, you're going to have people in the country, and unions especially, still disappointed. But this is really the starting firing gun on the general election campaign.
Lizzie, thank you so much. Lizzie Burden there, going through the very latest headlines in the last couple of days. Now, we're now joined by the British Retail Consortium Chief Executive Helen Dickinson. Helen, thank you for joining us. We have, of course, the strikes. We have food inflation. We have inflation overall. How difficult, after 2 years of pandemic, will it be for British retail?
Well, I think what the retailers in the UK and across the world have really shown is that they can navigate their way through lots of really challenging circumstances. And when I talk to business leaders, certainly at the moment, they say that what the headwinds that they're facing now is almost more challenging than it was in the height of the pandemic, because at that point there was just one gigantic issue, whereas now those challenges are on multiple fronts. Lots of input costs coming in, higher prices for businesses themselves, which means that some of those are feeding through into the prices that consumers are paying. There's a really tight labour market. Supply chains are a little bit easier and more straightforward than they were in the early part of last year, but freight costs are still much higher than they were pre-pandemic. So a lot of challenges to deal with, but a resilient group of people to deal with them.
So we're also looking at the Bank of England releasing its monthly decision maker panel survey saying that inflation expectations are broadly unchanged. What are the of course, groups that you're representing telling you? Do you think inflation has peaked? Will it get better or will it get worse from here?
I think we might have reached the peak. Certainly, I don't think it will fall quite as quickly as some economists might be predicting, because certainly the people that I'm talking to are still talking about those inflationary pressures that are coming through into the supply chain and take some time in many instances to feed through to prices. So certainly I think we might have reached the top of that curve, but I think it will be a bit of a slower fall than many are predicting, and perhaps not until the second half that we really see a big dent in the numbers.
Are you expecting some retailers to go bust because of this?
I hope not. We did see in the UK a couple of high-profile administrations of retail businesses last year. It's early in the year now, so hopefully we will see the results coming in over the next couple of days as to what exactly happened over Christmas, because until the numbers are in, it's really difficult to be precise about how good or bad Christmas was. But certainly what we haven't seen is a big sort of slew of very early in January profit warnings. So that's good news that perhaps Christmas was a little bit better than perhaps some were expecting.
I mean, Next definitely raised its forecast as we saw their Christmas sales defying some of the retail gloom that we've been talking about. Do you worry about overstocking? Was it discounts? Like, what kind of data are you looking at this point? I know it's a little bit too soon, but it'll be really interesting to see what you've been looking at for the last four to 5 weeks.
Well, certainly what we saw during December was that those inflationary impacts were impacting food prices much more than they were impacting across various non-food categories. And the reason for that was partly to do with those supply chain issues that had occurred earlier in the year. Many retail businesses, particularly in non-food, had built up some extra stock in order to ensure that they had what they needed to serve their customers. And that therefore meant that they needed to be a little bit more aggressive on the discounting front in order to move it during the course of December. So that was good news from a price perspective for consumers, but it did mean that we saw quite high discounting, particularly in some non-food categories in the lead up to Christmas.
First of all, how difficult, Helen, will it be for a lot of these retailers to pass on their inflationary costs? And how do you see it changing the habits of what people buy and how often?
I think it's really a challenge to pass on those inflationary impacts. Certainly, we have a very, very competitive retail industry across pretty much every category. So any retail business that is putting up their prices, they are only doing that because that is sort of the last resort from the perspective of other mitigations that they can put in place across their business, finding efficiencies, and looking for savings within the company before they pass them on to consumers. And what was the second bit of your question? I'll just come back to that.
Helen, so I was asking whether, how this changes the shopping habits. We've heard, of course, some horrible, terrible stories about families not affording, for example, toothbrushes for children, saying this was a luxury item. So how are you expecting, the habits of families to change in the next 6 to 7 months?
We're already seeing lots of people's habits change. Certainly one thing about inflation numbers is that they're headlines and they're based on a sort of standard basket. And what we all do is we manage our own sort of personal level of inflation by looking at what we're buying. And what we have certainly seen over pretty much the second half and a big part of last year is that more people are focusing on value items. They are looking at non-branded goods more often in order to take some of that personal inflation out of their basket and reduce their own costs without having to not buy the things that they really need.
Thank you so much, Helen Dickinson there, British Retail Consortium Chief Executive Officer, joining us today on some of the facts and figures that we could see in the UK. Now, coming up, we take a deeper dive into the UK economy and the many challenges it faces in the year ahead. That's coming up next, and this is Bloomberg.
Everybody in the UK will be glad to see the back of 2022. I mean, it's been a heck of a year.
I see this year as having brought into focus a lot of what's concerned me for a very long time.
We have seen a significant increase into the amount of attacks in the energy sector, 13 times more attacks of that nature.
We've seen valuations in the big tech come down.
My biggest worry is that we won't address that fundamental productivity question. I do worry that the Brexit issue is much more than a one-off shock.
There's so much negativity about what's likely to happen in 2023 that it's quite possible to get more positive surprises than negative surprises for the UK.
Because usually in difficult times, that's when entrepreneurs thrive.
Some prominent investors on the UK outlook and what opportunities and hazards they see in 2023. Now, we're now joined by Bloomberg's UK economy reporter, Phil Aldrich. Phil, thank you so much for joining us. Now, you had a great story yesterday, which basically laid out what we heard from Rishi Sunak, and he promised 5 things, and the fact that they're extremely, extremely tough for him to deliver. First of all, how does this country grow from here?
Well, that's the big question. For the next year, it's not going to grow, is it? We're scheduled to fall into recession for 2023. But so one of his promises is that we are going to grow. It's not a specific time frame, but he hinted that at the end of 2023, the end of this year, he does hope that we are beginning to grow again, which is a pretty modest ambition. That is already baked into the forecast. So that is what the Office for Budget Responsibility believes is going to happen. Actually, right now, in the last, since that November 17 statement where the forecasts were made, the conditions have improved. Yeah. The borrowing costs have come down. That will support the economy, and you're actually seeing stronger PMIs. Sort of just the business indicators have shown up, and confidence levels have shown up to be better than had been expected. So you could say that 2023 has started with a tiny little bit of hope.
A tiny little bit of hope. Okay, we'll take that. How's the Prime Minister doing overall? So the critics will say, look, he doesn't have the charisma of Boris Johnson. Mm-hmm. And his fans will say, well, the problem is that he's also trying to fix Tory policies that have lasted more than a decade.
Yeah, I mean, he inherits, it's been 12 years of Tory and coalition government, so, he's got no one to blame. Which definitely doesn't make things easy. So it was an interesting position he took in his speech yesterday, where he was saying that I'm making 5 promises. Judge me on those 5 promises. He's obviously looking at the election. If I fail to deliver on those 5 promises, then you just get rid of me. It basically was his simple pitch, which at least is kind of an honest stance. He doesn't have that sort of natural connection that Boris Johnson brings, but what Britain needs right now is effectively some kind of technocratic government that is going to basically re-establish, economic credentials. Because one of the other stories yesterday was that for the 3rd month running, foreign investors have been selling UK gilts, and that's the first time since the start of 2016 when institutions were rebalancing their portfolios for the risk of the Brexit referendum. It's a record amount for the average over 3 months is a record. So obviously there is an issue among institutions. patience.
I mean, why? So let's go first of all, and I loved your piece yesterday through the 5 stories. So he wants to halve inflation. He wants to deliver growth, question mark on how he does that. He wants to reduce debt. He wants to fix the NHS. And then he wants to deal with small boats.
Yeah.
Right? Like, what can he deliver on those 5?
Well, so if you take them one by one, so inflation, he wants to halve inflation next year. I mean, that's going to happen automatically. So if energy prices do not rise again at levels, way beyond where they are now, then you're going to see inflation effectively halving next year.
Right.
The growth plan, it's got to be growing before the election effectively, and he's already expected to be growing in the final quarter of next year. So, and things are looking better, so he ought to be able to deliver on that. So these are not particularly ambitious. The debt falling as a share of GDP. That he's already set to hit that target by 27-28. I don't think there's any change in the deadline there. And also those targets were set when the market conditions were slightly worse. So you'd say that he has a bit of, it's easier than it was a couple of months ago. The other two, the NHS waiting lists. We have record waiting lists. He's given.
But this is so hard to fix. I mean, you don't fix this in like 12 months if you don't have the staff.
Yeah, and so. Basically, the waiting list issue is a beds issue, ultimately, because you've got, as he was pointing out, you've got to get the people out of the hospitals so that you can get the people into the hospitals. Otherwise, you end up with this just elongated backlogs of elective surgery. And he has pledged 3.3 billion per year for the next 2 years, up until the election, effectively, which will be held by the start of 2025. He's committed this money. You'd have thought that would be, if he's going to target it, that'll give him the money and the ability to deliver that. And was it the small boats issue? I mean, this is
immigration, just for context. Yes, I mean, this is basically immigration. So it's what he's called
the channel crossings. It's all the illegal immigrants coming across, which has caused a huge political issue in the UK. And he said that we will have legislation in place to deal with this. So I mean, technically he could say, well, we've got the legislation in place. That's what I promised you. I didn't promise you that it would end. But obviously he's going to have to end the crisis there is on small boats crossings. I mean, he's already done some work with Macron. He's made an agreement. It's a tricky one to resolve. But
did it have teeth? I know there's also this distraction in doing maths, and the Americans have to stop emailing saying, why do you call it maths and not math? That's a whole other story.
Yeah.
And then you have Kier Starmer today that's going to be much more pro-business.
Yeah, so, Kier Starmer is, I think he's basically wanting to set out now his vision for a Labour government, which is that we're not. It's very different to the Corbyn government, where everything was going to be nationalised and it was a sort of profligate spending with no consideration for the budget, the balancing the books. He was saying that we have to have a robust private sector. That's not to say he's not going to want to privatise little bits. Like there's been talk about some kind of GB Energy, which would be some unified state-backed utility or energy provider. There's also been talk about renationalising parts of the railways, which are already drifting into national ownership once again as they go bust effectively under private ownership. His key thing is that we're going to, this is very much a Blairite vision of Labour, it seems to be, which is he wants the private sector, he wants foreign investors, he wants businesses to buy into what the Labour government will be, which is effectively going to be a responsible, more careful version of what the Tories kind of ought to be, with a bit more social consideration.
Okay. We'll talk about that because I think Kier Starmer started talking about 10 minutes, so this is a kind of new Labour rebranding. Phil Aldrich, of course, our UK economy reporter, sticks around and we'll talk about that next. Because it's his first big speech of 2023, we examine the priorities and promises of UK opposition leader Kier Starmer if the Labour Party wins the next general election. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, UK opposition leader Kier Starmer is due to speak shortly in East London, making his first pitch to the electorate of 2023. Now, the Labour leader is expected to lay out his plans to tackle the cost of living crisis currently gripping the country whilst taming rampant inflation if his party wins the next general election. Well, Bloomberg's UK economy reporter Phil Aldrich is still with us. And Phil, we were discussing on whether this is actually now the party of business, whether he's pitching to business. What does a Labour government mean for the Bank of England?
Well, he's going to want to make sure that the status quo is reinforced. It was, of course, the Labour Party that gave the Bank of England independence in 1997, and so he is going to say, we're going to stick with the mandate. We're totally in support of independence. So, you'd expect more of the same, effectively.
So, if we're just starting 2023, what is your biggest worry? I feel like every day we have bad headlines on the UK economy. I know you said there's a bit of glimmer of hope, but what do you worry about the most?
The issue which I think is sort of most chronic in the UK is this labour market shortages that we have. We have fewer people in work than we did before the pandemic, and that is unique among sort of major advanced industrialised economies. And so the government has actually got a review. It's called the Stride Review, which they're looking into what's happening there and what they can do to help fix it. So they're trying to use incentives to bring older people back into work who've left the workforce, but also the benefit system appears to be creating cliff edges. So you've got means-tested energy fuel allowances, which mean that if you earn £1 or take on extra work, you lose £900 of benefits. So there's massive disincentives to people taking on more jobs or work. So those kind of issues.
Phil, do we know why? I mean, some of the older population did come into work, and it's unclear whether this is because they, had access to NHS and so were able to do what they had to get back in, or whether it's actually because of the cost of living crisis.
Yeah, so part of it obviously is that there are these health backlogs, so people just need to get fit to get into work, so that is one of the issues. But obviously another part of it is that people have been dropping out because they've been able to liquidate money from their pensions, so they don't need it. They're beginning to realise that they probably will.
All right, Phil, thank you so much, as always, with a lot of insight. UK economy reporter Phil Aldrich. Now, be sure also to subscribe to Bloomberg's In the City podcast that I host with David Merritt on Apple Podcasts, Spotify, or wherever you get your podcasts. New episodes drop every Thursday. It's today. That's it for Bloomberg UK. This is Bloomberg.